First, we have Dennis, co-founder of Bitwala. Give it up for Dennis. And then you just saw Max K from Debify. He's back on stage, so give it up for Max. And I love his name, Mauricio di Bartolomeo. He's the co-founder and chief strategy officer at Ledden. And your moderator for this panel will be Juraj Bednár. I'm not sure how much I messed up the name there. He is the co-founder of Polis in Prague and Bratislava. So take it away. Thank you.
Hello, welcome. So you're all Bitcoiners, you hodl, and now life starts happening. So what to do next? Your sats are safely in your hardware wallet, and suddenly sync breaks, and you need it fixed. And what are our options? How can we actually use Bitcoin? How can we integrate them in our everyday life? And we have two people who are in projects that offer collateralized lending, collateralized with Bitcoin. And we have Dennis from Bitwala, which has, it's fair to say, it's a Bitcoin bank. So there's a way to solve the sync problem in some other way. So let's start maybe with Dennis. How do you fix the sync?
So what I understand, the borrowing and lending and everything. What we try to do is sort of work around enabling the promise of Bitcoin being a money that's usable in real life. Because I think we all gave up on the notion that Amazon will at some point accept Bitcoin, right? And so if I have a decent amount and I actually want to live my life with Bitcoin as the center of my financial hub, then there needs to be a way for the local grocery store to accept Bitcoin. And what we do is we make that grocer accept Bitcoin without them knowing it. That means our customers and myself, being one of the top 5 customers of my own product, we do spend and replace. We put all our money in Bitcoin, and then when we have to make an expense, we use that.
Perfect. Many people, I think, don't understand the distinction between the unit of Bitcoin and the payment network. So what you basically enable is using the traditional payment networks to use your sats and send them over. So you can account, you can hodl.
Exactly. So there's a self-custodial wallet, and then there's a debit card, because the card is the API to the real world. We're now like in year 7 of Lightning or whatever, right? That hasn't really worked out at every corner store. So we rely on old rails to funnel crypto, Bitcoin in that case, through to people who accept.
For many people, this would cause a headache, and we'll go to the lending part soon. But the headache is this ugly government form of many pages that you have to often fill when you have to when you spend your Bitcoin. You said before when we were talking that, for example, in Germany, you don't have to pay like income or capital gains tax on this if you hold a Bitcoin for more than 1 year. What are the how do you look at the tax question, and it will bring us also to collateralized lending?
Don't quote me, but my reply to this is always taxes LOL. So I think everybody should be well aware to file their taxes or not. Europe being still a little bit divided in terms of regulation, what taxes are concerned, I cannot give advice to everybody in all the countries. And I realize that's one of the upsides that you can get from borrowing and lending. However, that also requires a certain level of expertise, and it's mostly available not through institutions that can be easily integrated into a financial app like mine, because it then again requires regulation and setup and compliance and all these super ugly things that we never want to spend time on. So I think to bring this sort of Bitcoin usability to the mass market, we're there. And if you guys can make it so that we can integrate this with no hassle and onboard our customers to you, then I'd be more than happy to sign something later, but I think we're just not there yet.
All right, so one of the headaches is filling taxes, but then you have to part with your sats. Of course, people would say, just spend your fiat, but if you have any fiat, then you have a shitcoin problem. So how did you get hold of this fiat? Why didn't you sell it for Bitcoin in the first place? So solving this heartache of parting with your Bitcoin, one of the good strategies that I like, and I use it every day, is using collateralized loans, which allow you to short the shitcoin, so you actually take advantage of its falling purchasing power. Would you, whoever wants, explain what is Bitcoin collateralized lending and how does it work and what are the risks? I don't know, I'll let you choose. Max, okay.
Yeah, so I think any sane Bitcoiner just hates selling Bitcoin, and I think Mauricio and I are a couple of people in the space who hate it even more, and you, Juraj. So collateralized Bitcoin lending is basically where you put your Bitcoin into work by using it as a collateral to borrow fiat or maybe stable coins, whatever your use case is. So we do the non-custodial collateralized Bitcoin lending, which might be a little bit more complicated, although we strive to make it very simple. And there's also custodial Bitcoin lending. I think Mauricio can talk about it more. There's different use cases, but overall I think that's basically one of the main industries in the future for Bitcoin, because obviously as the price will grow, there's less and less need, and there's also less and less will to part away with your Bitcoin. So obviously you're gonna be using Bitcoin mostly as a collateral. And again, one of the main advantages is that tax benefit is that it's non-taxable event in multiple countries. I think more countries in the world, it's non-taxable event than taxable event. There's still some exceptions. So there's a lot of benefits of borrowing against your Bitcoin. And for lenders, it's also a very unique asset because, again, as I mentioned previously, it's a highly liquid asset. So it's like a super collateral. If borrower at any certain point of time fails to repay the loan, you can liquidate it at 24/7 any day because markets are working always in Bitcoin. Bitcoin is working 24/7, and that's the beauty of Bitcoin.
A good analogy, I think, would be mortgage, which people know, and it's also shorting fiat. So basically, when you buy real estate, you put it as a collateral. So in this case, you are not putting real estate as a collateral, but Bitcoin. Maurizio, maybe you could tell us how does it work in practice if you want to fix the sink? How do you actually pay?
Definitely. So we started Ledin actually to solve our own problem. So I'm from Venezuela. We started mining Bitcoin back in 2015. The mines were successful. You get your Bitcoin. Bitcoin goes up in price. You want more Bitcoin. The only way to buy or grow the business is to sell the Bitcoin to reinvest it. And that always proved to be a bad idea because Bitcoin just soared every time I bought the ASICs. And to your point about shorting fiat, I had seen in Venezuela many people make a lot of money by borrowing bolívares and buying dollars with it and just let inflation do its thing. And they basically benefited tremendously from the depreciating purchasing power of the bolívar relative to the dollar. And they made a lot of money. And then once the loan came due, they would sell back a fraction of the dollars, repay the whole bolívares, and pocket the difference. Americans do this with mortgages too. Americans borrow from their banks, like they borrow like 90% of the value of the house at like 3-4%. Inflation, we all know, is way higher than that. So that's where the value comes from. That's where your profits come from. Your house is not doing anything special. Your house is not getting any more valuable. It's the units that are getting debased. So when I saw the need to finance Bitcoin, instantly I thought, oh, well, I'm just going to go to a bank. One big financial institution is going to say, this is a no-brainer. Here's your dollars. Give me the Bitcoin. And if you don't pay me, buy Bitcoin, and we're all happy. But we went looking for a loan, and financial entities would laugh us out of the room because they said Bitcoin's not an asset. Bitcoin's not an asset. I'm like, what do you mean it's not an asset? This thing trades 24/7. It's got billions of dollars of liquidity, and I can trade it at any time. So, and it's infinitely divisible. It's the same asset for anyone around the world. And I think what people often miss with Bitcoin is that we lend globally. You do too. We lend at the same rate. Like, we're a centralized lender. We lend at the same rate to someone in Europe as we lend to the same rates in someone in the US, as we lend to the same rates in someone in Latin America. Find me one collateral asset or any other financial entity that can say that. And people talk about financial inclusion, and Bitcoin's going to equalize access to credit, access to financial opportunity. It's happening. It's happening right now. It's not like some abstract concept. So I think it's here, and I think it's not going away, and that's why I think, you know, Max and I think all of us here on our panel are very excited about Bitcoin as more of a day-to-day thing, and you can do that by connecting it to the fiat world through a loan.
Yes, one thing, so basically if you're shorting fiat, if the interest rate is lower on that loan than the inflation that happens, you're basically benefiting, you're pocketing the difference. What many people don't understand, though, is that if you look at the inflation numbers, first of all, it's an average, so you don't really know because they don't buy what you buy. But the number you look at happened in the past, but the interest rate you are going to pay in the future. So it's percentage PA, but it's a different number about a different time period. So just that you know that you're not really doing an economic calculation if you look at these two numbers. One thing I wanted to mention, and then let's go back how to do it in practice. We might seem like weird people doing this, but even the states that are issuing the fiat currencies are shorting it like crazy. It's all debt financing. They're borrowing their own shitcoin. So imagine you have a product, and the way you use it is you are shorting it hard. That's crazy. So we are just doing the same thing as the people who produce the shitcoins, the fiat money. So, okay, so how does it work? I have a 0.1 Bitcoin and broken sync. What happens?
Super simple. So we lend 50% of the value of your collateral. So if you come to us with $10,000 worth of Bitcoin, you can take a $5,000 loan on the Bitcoin. The collateral Bitcoin is the only protection we have when we issue the loan. So if the value of Bitcoin starts going down, we'll ask you to send more Bitcoin to keep the healthy ratios. If the value drops to a point where there can be a point where we have to liquidate the part of the collateral to settle the loan, and we give you the difference. But that's how we protect the business, and that's how we ensure we can service everybody, and you know, that's why Lenin is still here today.
How do you receive fiat? You can send it to Bitwala and pay with the card. What are the other options?
So, people can disperse their assets in euros, dollars, stable coins. So most fiats we can disperse in most fiat assets. Our loans are denominated in US dollars, but we can disperse you the proceeds in the equivalent amount of any fiat currency or stable coin you want. Bank transfer, stable coins, know, those are the main methods.
Same with...
Yeah, very much similar. We just have a bit different LTV ratio. For stable coins, it's actually, as lenders determine, we're building the open market, so we have multiple lenders who are determining how the market moves. So for stable coins, the LTV ratio usually from 30% to 70%. And for fiat, it's again industry standard. I think Mauricio will agree with me, it's 50% default. And yeah, in our case, you create together with the lender, with us, and the Fort key holder, you create a multi-signature escrow on the public Bitcoin blockchain. You lock in the collateral. There's no possibility for us to rehypothecate this. It's very transparent. You can check it out through any block explorer, real time. And then lender just issue a loan to you, whether it's in fiat or in stable coins. But again, it depends on the use case. If you want to speculate or buy more Bitcoin, obviously stablecoins is your gateway. But if you want to buy real estate, you want to finance your business, then obviously you need to have fiat. Currencies that we're going to support starting from the next week probably going to be very basic, USD, Euro, GBP. But we are in talks to add more and more different currencies. And yeah, that's how it works, pretty much simple. It's like... it's similar to mortgage or banking. but the difference is that, again, the underlying collateral is way more superior than anything else on the market at the moment. And that's make a lending business in Bitcoin very, very much interesting, especially for the lenders, because it's basically it's a win-win for them, because even if the borrower fails to repay, they can liquidate collateral like instantly.
I have shown yesterday in my talk that Bitcoin is the 6th largest reserve asset if you count only M0, so cash and central bank deposits in the case of fiat. And I think this actually makes it true reserves, because you really start using Bitcoin just to work as you as a collateral, just to prove that you can pay the loan back. I have 2 questions for you. One is, how much can you realistically borrow? You know, can you buy a house, or is it for cars, or is it for broken sinks? And what happens, when do you have to pay it back? Can you extend the loan? Can you use the collateral to pay it back? Just briefly this.
Yeah, happy to. Like how it works at Ledin. So at Ledin, you can borrow, but no, the amount, the limit. There's no limit in the amount that you can borrow. The size, the individual loan size, max size is $3 million. But there's clients that take multiple $3 million. So definitely they buy real estate. Real estate purchases is one of the biggest use cases for our loans. Our loans last for 12 months. And if the loan-to-value ratio is healthy at the time of your loan maturity, it auto-renews for a new 12-month term. So we have clients that have rolled loans for 4 years, 5 years, you know, and they're still on the position. And interest rates, importantly, at Ledin, all interest and fees come due when you want to repay the loan. There's no requirement for you to send monthly interest payments into Ledin, and that's important because we have a lot of loans in Latin America, and a lot of these loans are, you know, $500 to $1,000. You know, we have $3 million loans, we have $500 loans, and for a person taking a $500 loan, asking them to make a $5 interest payment via a wire every month is just punitive. So at Ledin, it's very easy to use in the sense that it's as low touch as you want to. You do want to keep an eye on your LTV and make sure that you always have enough Bitcoin and prepare yourself to top it up if you need to. But the idea there is that you don't have to be constantly working and thinking to, you know, to repay interest and things like that.
So we currently have limit 100,000. But as I announced, we're going to add the cold card as a key storage device, and that would basically means that there's no limits anymore, because it's pretty much safer, getting safer and safer. So in July, we're going to increase limits to whatever you want to borrow. Now, duration is 12 months at the moment, but again, in July, we're going to increase it to 3 years and then to 5 years. As Mauricio mentioned, we also don't have any requests or any obligation for a borrower to pay monthly installments. So usually it's like period is 12 months, the same, because it's easier for us also to manage the LTV, and it's easier for lender. So at the end of 12 months, whether it's 1-year loan or 2-year loan or 3-year loan, we're just going to request you to pay the interest for the previous year, and you can roll it over again and again and again. But again, as it's a market for lenders, some of them will decide how they want, and we don't have fixed schedule of repayments, but we also allow you freely to pay when you want to pay or when you have money. So we don't care in that sense.
So, Dennis, you have said that you're not a big fan of collateralized lending, and there are risks. So,
well, I traded stocks and bonds for 10, 20 years before going down the rabbit hole, so I completely understand it, like how it works. I think that there's 3 aspects. One, it shows that we're both altogether not of the camp of hyper-Bitcoinization. So there will always be a secondary or tertiary currency or money or whatever you want to call it that we use for short-term liquidity, and Bitcoin is the reserve asset. Then I think this is this method of procuring fiat is something for more sophisticated individuals that have a larger amount of Bitcoin and that they want to invest, and they don't want to get rid of their Bitcoin to make an investment. I don't think this is something that you want to use to finance your daily life, right? Just for daily expenses, because in the end, even if you like pay anywhere between 10 and 20% interest, even if it's in USD or euro, you're going to be caught in the rat race to get more fiat, to pay back that loan, to get back your precious Bitcoin. So I think we're all on the same side. I make use of my Bitcoin to facilitate my daily life because these expenses don't necessitate taking up a huge ass loan, right? And those people who really have an investment need, they want to like build a factory or buy a couple of real estates that pay for themselves and then use that as a collateral to make that investment, then that makes perfect sense. But you should never, as a rule, take out a loan for consumerism, right? Or is that what's your customer base like? Are there a lot of 5K loans that just want to buy the latest TV, or what's the reported use case if you ask your customers?
So for us, the most common use cases are investing in real estate, divesting Bitcoin holdings into other assets. A lot of it is real estate. The second one is entrepreneurship. So people build Bitcoin wealth, they borrow to start a business. You know, we've had a lot of people borrowed for medical emergencies. This is another one. So those are like the main use cases. But to your point, rarely do you see somebody trying to finance day to day. Like typically, it's either some people pay for school, some people buy more mining equipment, but it's not very much like grocery shopping. You know, it's not that's not a stated use case.
So for us, it's entrepreneurship. Also, obviously, buying more Bitcoin. That's a good strategy. And yeah, real estate assets, you know, diversification for some people. I don't know why they do that, but they do that, obviously. Regarding the day-to-day, yeah, we have a certain limit that doesn't allow you to borrow like small amounts. But we're also thinking in that direction, so that's actually a possibility for you just need to make it more consumer-friendly, easy to borrow, literally in a couple of clicks. So, but yeah, that's also a possibility. I know that a couple of companies are actually looking into providing loans for small day-to-day activities. Like you go for a conference, you need to pay for your hotel, you need to pay for a flight. Probably at some point in the future, you will be able to do that as well with your Bitcoin.
I have to say I'm probably the most degenerate out of you because I use collateralized loans for day-to-day spending all the time. Of course, I do it in batches. I just borrow a larger amount and then I slowly spend it. And this actually works if the price appreciation of the collateral is higher than the interest rate, which I believe it doesn't have to be. So don't be me, you know, do your own research and do your own gambling. We briefly touched on interest rates. I think it's an interesting question. I've had collateralized loans for 3% back in time, so it depends on the state of the market. What are the interest rates now? And then we'll go back to the risks, because I think there are more risks that we should really touch on. So.
Yeah, so I think before we talk about like the rates today, and the rates today are high as they are everywhere. So rates for loans are 14.4% up to 16.5%, depending on the type of loan you want. But before rates right now in the US, so when the US raises interest rates, it competes against liquidity everywhere, because the dollars that an investor lends to the Fed are the same dollars that it could potentially lend to a Bitcoiner, right? So you have to then match and surpass the Fed, right? So there's a risk premium over the Fed on everything, whether it's corporate bonds, Bitcoin lending, everything, right? So at 5.25, like what I want to focus on is the delta between Fed funds rates and the effective loans rates. When these products came out back in 2018, lending was happening at 18%, okay? When at the zero interest rate environment, before everything blew up, companies were lending like sub 10%. We were lending at 8, 9%. So the trend is down. Now, when the Fed came back and raised rates from 0 to 5.25 again, obviously everything went up again. but the delta over the Fed funds rate is getting compressed and compressed and compressed and compressed. And it will continue to do so as operators continue to perform and show that Bitcoin, the loans are fully collateral, there's no loan losses, and you're getting a great yield out of it. So I see a world where lending against Bitcoin will be cheaper than lending against US real estate, because it's a better collateral asset for the lender. So I'll pause there.
Yeah, so we saw on our platform, again, because multiple lenders are competing, we saw for a certain time even loans with 12%. So it's usually between 12 and 16, 17, something like that. As more and more lenders actually will enter the market, they obviously going to start competing with each other. And it also depends not only on Fed, but it also depends on Bitcoin cycles. Basically, in a bear market, you can get one-digit percentage loans because like borrowers are scared, maybe price will go even lower. But during the bull cycle, you know, like lenders understand that there's a huge cost of opportunity of selling your Bitcoin now, and they do understand that borrowers are sometimes happy to overpay for an opportunity to hold Bitcoin, because in 12 months it could go twice, triple in price, and you will obviously lose if you will sell now. So yeah, the market is pretty much, the good thing about Bitcoin is that the market is pretty much flexible, and I think it's closer to the free hand of the market that was explained in basic economy than something else, because like this is not determined by any centralized authority. You know, it's a free market, a lot of participants amount is actually getting bigger and bigger. So hopefully, as Mauricio said, I think, yeah, the rates will be at some point even lower than those rates for traditional assets, because again, it's like super liquid stuff, and for lenders, it's the main thing that the collateral should be liquid. Because if you have a real estate, it will take you months or even years to liquidate, and the price can go significantly down. You will have court cases, you will have a lot of stuff to deal with, and you're stuck with it, basically. It's highly liquid. So yeah, I think we're moving in that direction.
I am one of the people who also likes to help the rates come together, because when I log into my traditional bank and they offer me a loan at 7%, and I know that I can get 12 or 14, and I consider the risk low enough because it's fully collateralized by Bitcoin, which I trust. It's another very non-obvious use of Bitcoin, because here it's fiat only. I basically borrow 1,000 euros, I lend it on one of these platforms, but I know there is Bitcoin in the background, so I know that I will be paid back, if nothing else, with Bitcoin. If you see this opportunity, that's another way how to get additional income to finance your life. You just pocket the difference of interest rates, so that's another way how you can use Bitcoin. Let's go back to the risks. So, of course, you are sending your Bitcoin to some other address, and there are spending conditions, so things can happen. The price of Bitcoin can go down, so it can get liquidated. You guys might go out of business. I hope not, but you know, where do you liquidate if the website suddenly does not work? If it's a 5-year loan, it's conceivable. So how to think about these risks and how to determine if they're worth taking? I would start with Dennis probably,
yeah, I'm having trouble pricing these into, you know, whatever I have as opportunity cost. So let's say I want to buy an apartment or anything, and I need $500,000. Do I let go of, I don't know, 10, 12, 15 Bitcoin, put them in any address, get some euros, and then I'm not debt-free anymore, but I have to earn 10, 16% in fiat every year just to basically get back my Bitcoin. So that's...
But if the Bitcoin grow in price, then...
Well, if, when, and why, you know. you never know. There have been protocols on Bitcoin chains, like side chains, like Zero on Rootstock, I think it was, Sovereign, that offered a very attractive loan at 0.5% upfront. Sadly, for whatever reason, they shut down because they had to issue their own stablecoin to facilitate this. So I think as long as there's some real-world interaction, I'm risk-averse and kind of letting the pros handle this. My lawyer would say if the risk is non-zero, it's one. Right? I've lost money in crypto, like everybody here probably has. And one of the things that make me sleep well is that I'm debt-free. Right? I'm sovereign. I have my Bitcoin there. You know, I'm not going to tell you where. But you know, if shit comes to shove, I will take them and be on my way without having to get some fiat to get them back.
So one of the ways how to think about risk in this case, I think, would be to determine how much of your net worth are you willing to risk in this lending platform. So for Dennis, it might be zero, but everyone has to reach their own number. I definitely don't recommend anyone to approach like 90% at all. Like for me, the number is 10%. That's what I'm willing to risk, and then the like net worth percentage adjusted risk might be worth for some people. There are but you have to think about all these risks, and I talk about it. I wrote a book where I talk about collateralized lending, and the chapter about the risks is as long as the how to do it. So many risks are not non-obvious. So for example, many of these platforms, you can maybe say how you approach it, but many of these platforms require KYC, and that means that information about part of your wealth could leak. So that's another risk, which is not losing your Bitcoin, but losing your privacy, and then being exposed to, people know where you live, how much you have, how much collateral you have, and so on. So just saying out that there are many risks that you need to think about. It's not, will I be able to pay it back or no? But there are like many risks that we should think about. So if you can talk about maybe KYC and other risks.
Yeah, I mean, listen, it's clear that we saw the collapse of a bunch of lenders just not long ago. We actually refinanced like over $40 million worth of Celsius clients into Ledin out of bankruptcy because it made sense for them for tax reasons. We won't get into this, but there are risks. Like to Dennis's point, like people have lost money in this space, and you need to be very aware of these risks. So different companies go about it in different ways. At Ledin, there's a lot of things we do. We're a fully regulated company, so we do need KYC. That's part of our compliance program, and that's how we ensure we're always going to get the cheapest cost of capital, because as a regulated entity, we can face other regulated entities that have lower cost of capital, and that's how we basically give the best offer to our clients. We also do things like proof of reserve. So back in 2021, everybody was adding crazy flying tokens. We were bringing in accountants at Ledin and doing proof of reserves reports that our clients can verify, and they happen every 6 months, and you can go and check them. Everyone here with a Ledin account can go check our most recent one. Every month, we are lending business, so we like showing our clients how the assets are being lent at Ledin, what percentage of the float is being lent of each product. So we do what's called an open book report. So every month, our clients get a report on what the lending activities that are happening at Ledin and how they're changing. So they can make their own decisions and assessments as to risk, right? So there's layers upon layers upon layers of risk management, and I think that's crucial for this industry. A lot of people thought that, after what happened in 2022, many people think, okay, well, lending is a bad thing, lending, but it's not. It actually can be done responsibly. We, like Max, us, and a few other groups are proof that this can be done responsibly. And I think there's a big, bright future, but you gotta do your diligence, do your homework, and please, if you're ever considering these services, diligence them, call them, try to do as much research as you physically can and compare, and then make your decision.
So we do the non-custodial lending, meaning that every contract has a public Bitcoin blockchain address with a set of keys. So we don't reauthenticate, and even if we're down, we have doomsday software, as we say. So the rest of the involved parties still have the majority of the keys. So even if Debify is not available for whatever reason, you still can coordinate between yourselves and release the money from the collateral. So it's not like, there's no vendor lock-in in Debify, basically. As for KYC, we have different types of loans, like in some countries, for example, stablecoin loans, if the liquidity provider is from that country, they're not subject to do the KYC, so you can choose stablecoins, and in some countries you can borrow without going through any KYC at all. But of course, if fiat is involved and if it's a regulated entity, then there's no other option how you can borrow, because these are the rules, and these are the rules that are not enforced by banks. These are actually the rules that are enforced by governments and government organizations. So it's like, it's how the TradeFi thing operates. So if you want to have fiat, be ready to provide certain amount of data.
I'm probably one of the most known haters of KYC, and I'm going to say something positive about it in this case, which is very unusual for me. And it also relates to Bitwala. So basically, if you want to buy real estate and you would want to receive like €500,000 or €1 million from an exchange, the bank will most probably close your account, especially if you don't tell them in advance. Bitwala is a Bitcoin bank, so you're doing this, you know that people are spending their Bitcoin, so they know in advance because that's how Bitwala works. But with collateralized lending, you're not receiving money from an exchange, you're not selling your Bitcoin. So if the bank asks, what's this €1 million, you say, I borrowed. Here's the counterparty, here's the contract, and this is the source of funds. They found me creditworthy, and I just received a loan, so it doesn't have anything to do with selling Bitcoin. There's no money laundering. I'm good to use this money. So when you talk to banks, we always think about KYC in terms of regulations, like who has to do it and who doesn't have to do it. But the financial institutions are those that are regulated, and they want to know that the money is nice and clean. And so this could be actually an advantage in this case. You're not going to be able to receive €1 million anonymously in any case, so you're KYC'd and surveilled in any case. So maybe Dennis, you can tell something about this topic of KYC from the point of view of a bank.
Well, I also don't like KYC because obviously it's annoying, it's time-consuming. For me as a business, it's expensive. Every country has their own damn idea of what provider it should be and how it should work. You can't easily share KYC, so even if we, let's say, integrate you guys, both of them, we would have the customer relentlessly re-KYC'd. We're trying to make the impact very small, and we're also, with this €1 million example, we're also trying to make it so that in the end, the money comes from an account in the customer's name to an account in the customer's name, so the bank will ask less questions instead of it coming from some limited in, I don't know, British Virgin Islands or Venezuela or God knows where. But I also want to make the case about KYB, like know your bank. Like it doesn't hurt to go down to the local branch of whatever bank you're using and shake the guy's hand and say, listen, there might be some money coming in. So I think it's like with the tax authorities, if they write you a letter, it's always bad, but if you sit across from someone, you can probably make it work, even for $1 million.
Thank you very much. There is life behind hodling, and you can do many other things with Bitcoin. We had Dennis, Max, and Mauricio. Thank you very much.